Hello, welcome to the latest Travel Weekly webcast. Not so much a COVID lockdown webcast now as is travel poised to restart. I'm Ian Taylor and I'm joined by Chris Photi, Head of Travel and Leisure at Hart Associates and the leading accountant and financial advisor to the travel sector. Chris, your time's been devoted to helping businesses conserve cash and secure funding through the crisis. Have you been able to help?
Certainly we've been able to assist. I mean, obviously throughout the period of lockdown, we've seen changing announcements coming from the Chancellor with regards to various support measures for business. Obviously, I'm focused on the travel sector. Got off to a bit of a slow start, a lot of very positive announcements, not much detail on the Gov website. Initially besieged by a lot of our clients inquiring, but slowly but surely things have become clearer. Obviously, liquidity is a key issue for travel businesses at the moment, and therefore the government support to the various loan schemes that are available for business has been an important lifeline or potential lifeline for travel businesses. For the very smaller businesses, you've got the bounce back loans that were introduced a little later. For the smaller to medium businesses, you have the C-bills loan. And then, of course, for the larger entities, we have the CLIBBLES loan, the larger ones over 5 million. I suppose we advise the whole cross-section of those. We have a few of our smaller clients with bounce-back loans. Vast majority that we've been looking at have been civil. And but we have advised larger travel entities, not so much on the accessing of CLIBBLES, but the regulatory impact and how the regulators would view the obtaining of those debts. So that's kind of a broad spectrum of where we've been advising. Bit of a slow start. Banks weren't particularly well geared initially, not unsurprisingly, can't criticise them for that. It took a while for their teams to get up to speed, develop application forms and that sort of thing. Our overview would be that on the smaller stuff, the banks have been pretty damn quick. Bounce back loans between 2K and 50K have been signed very, very quickly. I think that probably indicative that the smaller banking credit teams probably can sign things off without having them reviewed higher up by some sort of credit committee. Initially, smaller CBILS was a bit of a bun fight, and bankers being what bankers are, were asking directors for personal guarantees, charges on their homes, mortgaging their wife and kids for the 20% of the £250,000 loan they were asking for. The Chancellor came back and said they won't be doing that anymore. Since then, I think loans up to 250k under CBILS have been whistling through banks reasonably quickly. And we are now seeing the larger CBILS, which has been a more drawn out process. And obviously, if you're looking to borrow £5 million, the bank has a duty, even under this scheme, to vigorously review your financial model, the financials, your wherewithal, the ability once bounce back happens to support these loans. And I would say the vast majority of those are just about coming to fruition now. And we have a portfolio also of our clients who have not yet applied. They have not had immediate cash flow problems. They perhaps have pursued requirements for funding coming later in the year as they move into a bounce back, and they've not wanted to get bogged down with the rush and the queue that the banks have had to go through now. By and large, the banks have been supporting good travel businesses. They're not going to support a business with a CB loan that was in very bad shape prior to COVID-19 or was loss-making. But if you had a buoyant, good travel business and COVID-19 just led to a turn-off, no bookings, drying up of new cash coming in, but with every prospect of getting back to those levels after bounce back, then the banks have been pretty supportive.
Okay. And there's no time limit on applying for the loans. It's not like the furlough scheme, because that's been closed now, hasn't it?
No, there isn't a time limit. No.
Okay. And you said that the bigger loans are starting to come through. Though that money isn't in companies' accounts yet, is it? Or
There may be some. I don't act for everybody. I have not seen too many with cash in the bank yet. In fairness, it takes a while to put a pack together. It takes a while to refashion your model. I mean, obviously, good businesses, well-run businesses, larger businesses would have had business projections probably going out for up to 2 years in quite a lot of detail. They had to be refashioned, obviously, with COVID-19. Assumptions had to be made, and those assumptions are quite difficult for finance directors and accountants to make, because you're trying to estimate when your flow of bookings will recommence, when you will start departures again. And sometimes perhaps you're having to do it if you're a larger entity with a reduced team. Perhaps some of the team within the finance section of the business have had to be furloughed. So it took a time for those to get together. It takes the time to make an application. The banks look at the application. They come back with quite a lot of questions, obviously. And then eventually it needs to go up to some form of credit committee sanction. They may have more questions. So the whole thing does take time. Initially people were pretty desperate to do these quicker, but I think there's been a realization that it will take a little bit of time to do these. Certain ones we're looking after, they're not saying to us, we're running out of cash tomorrow, oh, woe is me. But they would like to get them in place. So one or two are quite anxious to get their term sheets done. And then if they're in a regulated environment with the CAA, the next stage is going to be to take that term sheet to the CAA, who are then going to have to go through a process of sanctioning. ATOL holders have a requirement under ATOL standard term 4.9 to pre-advise and pre-approve of any change in their debt or finance structure with the CAA. I talked to Mike Budge, the head of ATOL, yesterday. We hadn't spoken for a month or so for a catch-up call. He's quite anxious for his team to get reasonable lead times in that process, and his recommendation is get to them as quick as you can. I think it's sensible to advise the CAA if you're looking at some sort of debt funding, but equally the CAA are not going to be able to do very much until they understand the extent of the loan that you're taking, the terms of that loan. So it's pretty pointless, I think, getting into too much detailed discussion with your regulator until you've got some pre-agreed terms in draft from the banks. Quite a few of the main banks are fully conversant with regulatory requirements, having come across the CAA's requirements before on previous leveraged transactions. But one or two of the banks aren't. Of course, a lot of banks that do these loans. One or two of, let's call them the lesser banks, don't understand this process. And one of the key things that the CAA are very hot on is what security is taken for any of these loans. Generally speaking, the CAA will not accept a debenture or floating charge over the actual assets of the ATOL holder. On these larger leveraged private equity arrangements, you find that there is a ring fence. Banks tend to take share pledges to secure their position, not being allowed to take a debenture or floating charge over the assets of the entity or the ring fence travel group itself.
okay. And broadly, how long is this process then? For a loan of about 5 million that you were talking about, how long does a company have to expect it to take? We're talking months, it sounds like.
Well, I think you've got to face up to the fact, if you've got your model, you've got your pack ready, it's ready to go. I think banks can turn it around within 2 to 4 weeks. I put one in to a bank about 7 or 8 days ago. I spoke to their travel lead on a call yesterday evening, and he was pretty geared to getting it progressed by next week. So that 2 to 4 week timeline. CAA, who knows? Mike says, look, we aren't going to go through the normal elongated process you might have experienced on the other leveraged transactions. We do realise that businesses need quick decisions, but I'm thinking probably a 2 or 3 week scenario there. So start to finish, 6 to 8 weeks.
Okay. And you said that companies need to make assumptions about when they're going to see some cash flow and so on. Typically, what are people saying in those assumptions?
Well, there's a lot of differing opinions. Even the largest tour operator, TUI, has made announcements that it was hoping to give some travel during June. I think that's pretty unlikely, personally. July, maybe. I think August, September, from my feelings and what I'm seeing and reading about over the last week or two, I think we could get some summer holidays. If you'd have asked me 4 or 5 weeks ago, I'd have said probably not so sure. Some have written the summer off quite simply and said we're not expecting things to get back to any semblance of booking normality. I've got 1 or 2 clients, in fact 1 or 2 businesses that I'm a shareholder and officer of, and we've prepared our model based on no departures till after the 1st of April 2021. And that may be a bit pessimistic, but if you take that view and you can comfortably get through to then any earlier bounce back is a bonus. It's where you want to pitch it. I think anybody pitching it saying they expect people to start travelling next week is not going to get much traction with the bank or the regulator. But if they're projecting back end of July, perhaps going into August, September, and their destination mix is one perhaps where you would expect it to come back, short haul, maybe in the countries that are already saying, look, we're open for business, Portugal, Greece, these type of places. It is potential, I think, now. Obviously, the quarantining measures announced today by the Home Secretary are not ideal. I think they were expected. I think a key date for the travel industry is now going to be the 29th of June, the 3-week relook at all these measures. I would hope that the quarantines would be removed then, but I think the key factor is we've got to make sure that if we're expecting a country to air, bridge or travel corridor with us, they're going to be assessing our infection rate just as we assess that nation's infection rate when we send people there. Now, providing that looks right, and both of those countries are willing to do business without quarantine, then we could see some movement.
Yeah, it has to be bilateral, clearly. Let's come back to quarantine in a minute. Just on those businesses that have taken loans, you said from 2,000 to 50,000. That's even for the smallest business. That's not a lot of money in the current circumstances, is it? Are those sorts of businesses going to have to go look for funding elsewhere, or can they come back for a second loan, or what do they do?
Well, I think some of the very smaller businesses, one-man band, very small businesses, probably £50,000 a material sum to them. When I look at the virus situation as a whole, I think smaller businesses are more nimble, they're easier to adapt. They may be driven by 1 or 2 individuals. They've perhaps cut down their expenses pretty rapidly. And when you think of a travel businesses, the key expenditure generally is staff and marketing. Well, they're probably not spending any money on marketing. Staff, probably majority furloughed, maybe just 1 or 2 working directors driving it forward. Perhaps had a rates rebate if they qualified, maybe done a deal with their landlord. If you added £50,000 into that mix, it's a game changer to enable that business to get, perhaps through to the end of October when furloughing finishes, and to be able to trade. So it's horses for courses. Not a lot of money, but it is to a very small business.
Okay. And just broadly then, how parlous a state are businesses in, would you say? Presumably it varies hugely by the business model and so on. But are some businesses looking very fragile now, or are you confident that most will get through at least to the autumn?
Yes, there are businesses that are in a fragile state, and when we've seen recent failures, probably in last week or two material failures were Shearings and Jakarta Travel. Jakarta had 52 staff. Shearings, I think, probably 2,500. So that kind of shows you the spread. I couldn't mention names, but I probably do 2 or 3 calls a week with companies that are in difficulty. Some, the odd one from our client base, 2 or 3 generally not from our client base. I do the calls quite freely. The travel industry has been very good to me. These companies are looking for a bit of direction, so I'm quite happy to spend an hour talking to them, talking through, hopefully giving them some ideas that might enable them to save their businesses. I mean, it isn't without potential benefit to me in the future. I've always believed if you throw bread on the water, it tends to come back to you. So there are quite a few that are looking at the situation. I think probably the more significant impact, just as you said, Ian, is going to be later in the year. And my budget, I was probably viewing it not dissimilar to me. The situation is that you're now, you're in the position now, okay, cash isn't coming in, but people have done all the necessary things to stabilise their position. They're trying to hang on to cash, with refund credit notes, etc. And they're living off that cash, and they perhaps need a bridge for their trading. So they're looking perhaps for loan or investment in that interim period. But what slightly concerns me is you'll get a company that perhaps is getting nearer and nearer a bounce back scenario, but its reserves are diminishing and diminishing. That will be a concern to regulators, because if they're going to hit the accelerator and take loads of customer cash and try and trade up through a bounce back from a very low position, that could be potentially a dangerous situation. And I'm sure there are a whole host of other problems that companies are going to have to overcome. I think these are down the line problems, types of things that I would think about because of my professional background. I'm not suggesting every single travel business should look at every single eventuality that's going to hit them down the road, but there are going to be things that will hit them, virtually a loss. If you're a travel management company, or the ability to IATA a ticket is important for you, IATA's rules say you post the loss, you submit your accounts, we're going to ask you for a bond. So that's going to change the mix of liquidity as far as that business is concerned. Now, I'm sure larger businesses are thinking about that, but some may not. Another area that I'm concerned with is insurance policies of all forms, whether they be financial failure insurance, scheduled airline failure insurance, insurance bonding. We saw at the March renewal 2 or 3 of the bond insurance obligors just pulling straight out of the market. If the CAA and ABTA are going to continue to insist on financial security or require financial security, that is an extra burden for travel businesses. You've either got to cover that off through your banking structures or hope that you're going to continue to get insurance support. I can see that being a problem. But notwithstanding that, I only think you can plan to that to a certain extent. You've got to address it when you get there, but you have to put the bridge to get there. And the bridge at the moment is liquidity. The government's acknowledged that. They've even acknowledged that some directors might have to sail close to the wind by looking at the insolvency rules for wrongful trading. Yeah. some were issued recently, which I haven't had an opportunity to read. I'll probably do it over the weekend. But that's definitely there because, you're supposed to look forward on a going concern basis from an accountant's viewpoint, at least 12 months. That's very difficult when you're firefighting here, albeit that there are problems to come. And that's a difficult balancing act for directors. But hopefully the government acknowledging that by the insolvency rules has given a bit more time for directors to just kind of take one thing at a time.
The business secretary was going to outline the changes on insolvency yesterday, and was taken ill with COVID during his presentation, which is a sort of an irony in the times.
Definitely an irony. I'm sorry to hear that for
one of the changes with the insolvency measures is that you can't issue winding up orders. Creditors can't issue winding up orders, so that's helpful. But it's very short term. It's temporary, isn't it? Do you see a crunch moment
it's
coming? So, pardon?
I missed that. So could you say that again, Ian?
The change were that for creditors not being able to issue winding up orders is temporary.
Yes.
So it's helpful in the short term. Do you see a crunch moment coming, perhaps in October following the September renewals, or maybe next year, 12 months on when debts start to interest payments come in and so on? Or will companies that are fragile be pushed over the edge by other factors, a delay in the resumption of travel or what have you?
Yeah, all of the above, really. I mean, at the end of the day, we live in uncertain times. There is no certainty about things at the moment for any of us in any walk of life, our personal lives. There is uncertainty, and all of these things could potentially happen. I think it's absolutely right that the government instigated arrangements whereby you can't issue a winding up order. It does give directors time to think. And the key thing about any director's thought process is to care for all of his stakeholders. Now, if you get one issuing a winding up order, all they're interested in is themselves. And if the directors then have to focus just on that one thing, they're not focusing on all their stakeholders. And any insolvency practitioner will tell you, providing there is light at the end of the tunnel, providing you believe there is a genuine way for you to care for the solvency of your business, that benefits all creditors because nobody loses any money. Whereas if you get a winding up order and they have to go into an insolvency procedure, well, eventually creditors will lose money across the board. Okay.
One of the drains on companies' cash has been paying refunds, and that's been a huge issue for travel agents and tour operators. What do you make of all that? There's been the row within the industry. There's been ABTA's stance on refund credit notes. There's been the failure of the government or CAA to confirm refund credit notes protected against insolvency and so on. Have you been advising clients on refund credit notes?
Yes, we've been advising them a lot. In fact, I was probably one of the first people to appreciate that other EU member states brought in emergency arrangements so that, for want of a better word, corona vouchers, which they were actually called, I think, in Holland, could be issued instead of refunds. I actually got through my overseas correspondence, stuff in Denmark, Sweden, wherever it was. I used Google Translate to translate them, and I fired them straight off to senior executives at ABTA and at the CAA and said, what are we doing about this? 2 or 3 days later, ABTA then started their campaign for refund credit notes by lobbying the government. So, I think that is a very proactive thing for travel, but equally I understand consumers' concerns who want a refund. having a refund credit note, and I think ABTA issued some very good advice pretty early on that, which aligned itself to consumer protection, was absolutely vital. You know, if you're issued with a voucher, it's not worth the paper it's written on. Which and Money Expert and these type of things said, for heaven's sake, don't take a voucher. People had vouchers on Thomas Cook and they lost their money. You know, refund credit notes are not the same as vouchers. As far as the CAA silence is concerned, well, I have to say in a slightly jaundiced way, that's typical CAA. I believe the ATT payment policy, paragraph 4.2 is clear that refunds and refund credit notes are consumer protected by the ATOL scheme. One thing I can absolutely tell you, if the CA come out and say they aren't, ABTA will have no option but to go for judicial review immediately. So, you know, watch that space. Not that I'm expecting the CA to come out and say they're not protected. I'm expecting the CA to continue to prevaricate.
The CA is waiting for a signal from the government, presumably.
Yeah, quite possibly they are. And not only that, the last thing I suppose the CA want to do is to come out with a statement that says, yes, these are protected, when they've got nothing to protect it with, because the Air Travel Trust is pretty low on funds. So they would have to get the government's okay. You know, as with the German situation on Thomas Cook, the government had to bail out because 110 million euros cap on payouts in Germany was insufficient. The government initially tried to get the 4 big insurers that effectively run the German travel protection scheme to pay out. And they said, well, you know, on the voucher, everybody gets it, says, you know, market cap 110 million euros. We're not paying out any more than that. So it cost Germany 200 million euros. The government then coming out saying, don't worry, these are all protected. That's our government saying, well, yeah, the Air Travel Trust Fund, if it's not enough, we're going to pay.
So it goes back to the Treasury, clearly,
does, yeah.
in that case. But just on the refund credit notes, I mean, ABTA pretty much drew up the guidance with the CAA. That's my understanding. So, you know, you don't expect the CAA to say they're not protected. But is it your understanding from your dealings with the CAA that the CAA is broadly comfortable with refund credit notes and accepts they will be protected under ATOL?
I think they are, and I think ABTA had good dialogue with the CAA, and I even think the Department for Transport was broadly in support of refund credit notes as a means to support the travel industry. I believe the block came to Bays, and I think Bays was more interested in finding out the insolvency impact. I think the industry and ABTA were a little slow in getting that insolvency impact. There were a lot of emotional letters about supporting the industry, but I think there was a 3 or 4 week window when Bays did not get insolvency impact data as quick as possible. And I don't think the industry, as far as refund credit notes, were best served, that there were no immediate failures or early failures. I think 1 or 2 crunching failures at that time might have just changed Bays's mind with regards to a change tweak. And it didn't help when the EC came and said it would be an infraction if you do this. You know, Germany received the same. It didn't stop the other member states, you know, doing that proactively. So, you know, it's a difficult situation, but I think we've probably, you know, reached the whole impasse on refund credit notes. They've kind of filtered their way through. I think the industry in general has probably managed to get a 50 to 60% take up on refund credit notes, which I think is pretty good. I think there is a realisation, you know, among the consumers that they still want their holidays at a later date. I think it's proactive on the part of consumers to want to, providing they're still protected, support their favourite travel businesses. You know, it's all very well for which money experts say, give them the refunds, do this, do that. We're fighting for the consumer. But at the end of the day, if that encapsulates a lot of failures, what does that mean? Well, it means reduction in choice at the end of this. And of course, it means higher prices will have to be paid for holidays. Where will those guys be when that comes out? Have they done a service to the consumer in the long run by inflating the prices of their holidays? A different balancing act, but sometimes these consumer champions don't think about the end game. They just think about the immediate highlight, headline catching actions. That, you know, we must get refunds. Notwithstanding, I do understand that there are some people, individuals, who are really feeling the pinch at this time and need their refunds.
Yeah, of course. There's a belief amongst consumers, encouraged by some in the industry, it has to be said, that companies are just sitting on consumers' money. That's not the way it works, is it? Can you explain what happens to deposits and balances when companies receive them, and why the travel agents and tour operators haven't got the money to just hand it all back?
It's quite a complicated and convoluted supply chain. That's the first thing. You're you know, an online travel agent or a package provider, a package organizer, and you have an obligation under the ASOL regulations and the PTRs to repay the consumer within 14 days of cancellation of their holiday by you, because it couldn't take place. Now, that's difficult to do when you've paid out 45% of the price of his holiday to an airline who hasn't repaid you, is unwilling to repay you, or has a problem repaying you. Now, Regulation 261 provides a 7-day cycle, which should mould into the 14 days quite nicely. But if it blocks here, and certain airlines have come out and said, forget it, we're not going to repay anybody till September or whatever, that causes a problem in the supply chain for the tour operator to repay. Equally, it's not only aviation suppliers. Some of those suppliers would have paid DMCs or ground handlers money. They've got the same problem that travel businesses have got. They're trying to hold on cash for as long as possible. And of course, the other problem that particularly larger travel businesses face is the physical inability to deal with so many refunds at any one time. I mean, I'm currently sitting here trying to get a refund out of a very well-known airline for £5,000. And it's not the airline that's saying, I'm not repaying everybody, but I'm not getting very far. You know, and I genuinely think the problem there is they're having to process so many. Notwithstanding that, I think there are some travel business that perhaps hides behind that whole thing, but it's difficult to process refunds when 80% of your staff are on furlough.
Yeah, Carsten Spohr, the head of Lufthansa, said yesterday the German airline group faces refunds 2.5 billion euros, which gives you an idea of the difficulties of repaying that and just waiting.
It is a lot of money. You're having to pay it all out with nothing coming in. And most of the cycles of these businesses are built on a going concern rolling basis. Money comes out, it goes out, comes in, it goes out. They're refunds, you make the refunds. Now there's no money coming in, it's just money going out. You're trying to run a business by lowering your overheads, do all the right things, but it means that you physically can't be repaying these refunds. And not only that, it's kind of in your interest to delay that as long as possible until, as I explained, the 2-month cycle on CBILS and CLIBILS come through. Some very well-known travel businesses have actually come out and said, look, you know, hang on, we are trying to raise a CBIL or a CLIBIL loan. And the reason we're raising this money is to be able to make refunds when they fall due.
Sure. What's the situation with trusts? Because there's a general understanding that money goes into a trust account and is held until the consumer takes the holiday and so on. But in reality, that's not the whole way it works, is it? Because some suppliers have to be paid up front, airlines, for example. So presumably companies with trust accounts are having some of the same problems.
Yes. The a bare basis trust under the PTR says that the client's money has to stay until he's had his holiday. So in the purest form, I've heard it called the gold standard trust by some people. All of the money would stay there, including the margin. The travel business would fund the payment to the airline, fund the payment to the ground supplier, fund its overheads. And then when the clients come back the customers come back from their holiday, then the money gets released to the travel company to reimburse it for paying the suppliers. Alternatively, some make arrangements with suppliers who feel comfortable with the trust structure to be paid at the time of travel finishing. Obviously, the money being transferred out of the trust account at that time. But a CAA-approved trust works differently. A CAA-approved trust means that all of the ground arrangements have to stay within the trust till travel has taken place. But airlines can be paid immediately, providing the ATOL holder has some form of supplier failure cover, be it an insurance policy or a chargeback facility on the card payment. So in those circumstances, you've seen some of the larger trust holders saying, look, we'll pay you your ground monies back. We know you're owed the money from the airline, but these airlines aren't paying us. We'll give you the money as soon as we can get it back from the airlines. But the whole situation around trusts, you're going to see trusts become more prevalent in the travel industry going forward. It's very difficult for a travel business to switch from using company cash to a trust structure. Even with the CA's liquidity measures, they expect companies to retain a certain minimum level of deferred revenue in free cash within the business, but it isn't 100%. It's generally 70% or thereabouts. So there's even an acknowledgement by the CAA without a trust structure that 30% of the client cash is going to be used. Trusts are virtually impossible for travel businesses who sell through agents. You can't get the money into the trust account because it goes to the agent. A CA-approved trust requires client monies to go into the trust within 48 hours of receipt. If you're selling through an agent, their merchant facility is probably going to be T+3. They're not going to be able to get the money to you in 48 hours. So, you know, there's a lot of mileage, but I think trusts are going to become more prevalent simply because they tick off a lot of the stakeholder requirements of a travel business, not just the regulator, not just the refund scenario, but also things like merchant acquiring, Section 75 risks for merchant acquirers. A trust is perceived to cover all of those arrangements. And, you know, I've had one or two clients come to me and they've said, right, go to the CA, we want to go to a gold standard trust. Move us to a gold standard trust. We want to do it because we want our messaging to consumers to say, don't worry, we'll pay you back. It's a message that some travel businesses have unilaterally decided to send to customers. I'll mention one by name, Trailfinders. They have operated trusts for time immemorial. And, you know, their kind of approach to it has kind of been vindicated by this whole refund process. It's difficult to transition, but if you're able to transition, it will put you in a very, very good position going forward.
What does it take to transition?
Cash. I mean, you know, you have to have cash to put into the trust. It's going to affect your cash flow cycles. So if you have got surplus cash or you are able to raise surplus cash and to move into a trust model, it makes sense. Your messaging can be, in the event of a recurrence of COVID or something similar, we run a gold standard trust. You know, you're not going to get no nonsense from us with regards to refunds.
But realistically then, that's only going to be open to a very limited number of businesses, isn't it? Private equity backed or
yes,
so on.
Yeah, or funded businesses, smaller businesses. I mean, the TTA has a raft of businesses that do that, you know, hundreds. So some people have approached that. I'm not saying it fits all. It doesn't. You know, I think trusts have always, in my opinion, been a very effective consumer mechanism. Unfortunately, the CIA now get them, but for a long time, despite the mandatory trust accredited bodies, one or two of the senior management in the CIA didn't like them. It's pure and simple. ABTA always roll out the same comment on trusts. Oh, they're open to fraud and mismanagement and all this sort of stuff. I mean, it isn't. It's a self-interest thing. Their major competitor, the Travel Trust Association, does trusts. ABTA don't. And that's, a simple reason. But I don't think they can be dismissed quite readily. Yes, they're not very palatable. Also, if you take asset inventory risks, they're almost impossible. If you've got airlines to run, planes to run, hotels that you own, etc., that requires a lot of upfront cash, and unless you change the whole model. But I can remember a dozen years ago having a conversation, and I remember it as clear as yesterday, with the head of consumer protection at ABTA, and I said to him at the time, you want to get the two biggest travel businesses to go into trust on a mandatory basis, and you want to position the CA to do it because they're both publicly quoted companies. They're extremely buoyant at this time. They should be able to raise the funding to facilitate doing that. Now, if that had happened, we wouldn't have had the Thomas Cook catastrophe to the entire industry that we had last year.
Okay, but it seems that there's going to be understandable pressure to move to trusts at the worst possible moment in terms of availability of cash.
It is, but if you can't get financial failure insurance, you can't get bonding.
It's the only option.
Consumer Protect, it's the only option. And so some people are having to face with it's not palatable truth that you're going to have to do this because your credit card company is not going to let you take money in. You haven't got any ability to secure it with an approved organisation like ABTA or ABTOT because the bonding isn't available. There's a paucity of financial failure insurance. There are two clinging on by their fingernails. The others have headed for the hills. There's probably only two or three bond insurance companies available to everybody. Larger entities perhaps have other insurers. So, it's an inevitability. It's not something I'm promoting. It's something that's going to become more prevalent.
Okay. Just finally, while we're talking about refunds and so on, and we're going to have to speed up a bit, I'm afraid, Chris. Chargebacks. Okay. Is there a tidal wave of chargebacks coming, or has the pressure eased a little bit? People seem to be talking about it a bit less.
Yes, I think they will be coming. My own personal circumstances, I'm thinking potentially a chargeback, but the credit card company is going to want to see that you've taken it to its natural conclusion with the travel business. Why are you going for a chargeback? And if all the right noises are coming out and the airline or the tour operator is processing, etc., then they're not likely to approve chargebacks, not least because they're not taking any money in. So again, we get down to self-interest, and I respect everybody's right to self-interest in these difficult times. But, it's all very well to accept a chargeback, but the merchant acquirer is going to have to pay the money because there's no money coming in from the merchant.
Yeah, okay. You've never been reticent about criticising ABTA when you feel they deserved it. But what do you think of ABTA's role broadly through the crisis? Because without the advice ABTA had given on refund credit notes and so on, a lot of businesses would be in a more difficult position, wouldn't they?
Lot of good stuff, and I've been on the record as saying more than once it's good to see ABTA acting as a trade association. My big gripe is ABTA is such a broad church. It's very difficult to be a regulator, a people's champion, a consumer watchdog, and a trade association. And but they have acted as a trade association throughout this process. I don't think their lobbying's been effective. I don't think ABTA's lobbying of government has ever been effective. And I think that's something, the end of this that the industry needs to really look at. And when we are treated, we being the travel industry, treated as second-rate citizens by the government when it comes to the airline lobby. And that clearly can't go on. Something needs to be done about that. We lobby a lot, but don't achieve much.
Okay, maybe we should have one of these webcasts on that subject. How about the government's role up to now? We know they haven't clarified refund credit notes, but the job retention scheme, for example, the furlough and so on, and the business loans have been crucial to businesses surviving up to now, haven't they?
Yeah, absolutely. I've got one or two criticism of the government, but not in those areas. I think schemes they've put in have been really effective. The job retention scheme particularly has been effective. I don't know whether it's going to work out in the long run for people. I think a natural conclusion out of this is some people in the travel industry are going to simply lose their jobs, which is very regrettable. But the only two criticisms I have of anything the government's done is one, I think they locked down too late. I mean, Cheltenham, people from Madrid going up to Anfield, ridiculous. They should have locked down two weeks earlier. And if they were going to see through the 14-day quarantine, I think, and I know the Home Secretary wanted it, they should have done it back in April, and we should be coming out of it now, not putting it in place today or next Monday.
Yeah. How you come out of having advice against all but essential travel to everywhere indefinitely and then opening up to some destinations is tricky, though, isn't it? It would have to be quite complex FCO advice. Yeah, we advise against travel to almost everywhere, but not the Balearics, Greece, Italy. You know.
I think it is tricky, and I think, in fairness to the government, the Secretary might have been pulling for quarantine, but the Transport Secretary, think he was doing by the travel industry, was saying, no, don't do that, because it's going to affect the business. But I think, perhaps that one is hindsight. It'd have been better to, although I thought we should have quarantined our borders then anyway. I think we should have quarantined then, and we should be coming out of it, albeit tricky, talking about travel corridors. And of course, the start game was, if we'd have locked down 2 weeks earlier, we would be parallel with the rest of Europe. We're a month behind, unfortunately, which is why I think the 29th of June is a critical date. We are where these nations were virtually a month ago. If we'd have locked down 2 weeks earlier, we would be much nearer to parity with them, and therefore would be talking about travel bridges. You've got a situation where Cyprus is going to open for business on the 9th of June, and its two main consumer markets are the UK and Russia, but it's not letting anybody from the UK or Russia go to Cyprus. And that's because we're behind the eight ball on timings, just as Russia is.
Yeah, I think you're right. I mean, the reality is Spain doesn't lift its quarantine until the beginning of July. So if the UK, if they do set up travel corridors, they're calling them now, because there'll be Eurostar and the ferries involved to Spain, Italy, Greece, and so on. We could see travels resume from July, it seems to me, to EU destinations anyway, and we wouldn't be so far out of line. But everything.
I think you're right. I think more like August. You and I differ on this subject, I know, but yes, I can see it happening.
Yeah, good. Okay. We need to come to an end, but I wonder how you see the next few months. Let's assume that there's some travel starts, perhaps in July, if not then in August. How do you see companies getting through the September bonding and ATOL renewals and so on? And what view do you think the CAA will take at that renewal time?
It's difficult to fully assess. I mean, I can tell you how the CAA approached the 28th of April renewal. They had kind of three methods to the renewal. One was to renew a licence holder for only 6 months. In fairness to the CAA, they couldn't do that with everybody because they can't renew over 2,000 licences all in the one sequence. They don't have the resource. Most licence holders were renewed for the year, but had to are going to have to come back to the CAA with updated financial data by the 1st of October to implement a 1st of November variation on licence capacity. So they're going to have to actually say to the CAA, this is where we're standing, we want to now be able to sell into bounce back. And those where they were a little more concerned, that date has just passed. It was the 1st of June, oblique the 1st of July. That's a holding measure. It, you know, not being unkind in the comment, it was kicking the can down the line. They're going to have a bit more clarity in September. And, you know, it's going to be a difficult time for travel businesses, I feel. If in the interim, travel businesses have sorted out liquidity measures by the use of the loan schemes, that will go a long way to dictating how that renewal process would go. So, you know, by all means, push your modelling, look at what you're raising in the form of loans, look at the CA's normal free cash testing ratios. If you're going to be able to meet that, then you should be fine. One area that slightly worries me is the whole area of financial security, bonds, etc. Renewing existing bonds are going to be difficult. A lot of larger leveraged entities will suddenly find their EBITDA now being a negative EBITDA. The CA use certain markers around a multiple of EBITDA to assess whether they want bonding. Well, if you're a travel business and haven't got any bonding because you were relying on that ratio, that leverage ratio, that suddenly spins away. I think the CA will take a pragmatic view because I don't think they could do much else in relation to that. But who knows? I don't make the decisions.
Okay, and you said you fear job cuts, that they appear inevitable. When do you see that happening? As furlough ends or in the autumn?
Yes, yes, bluntly, I see an outworking. You know, furlough is becoming less beneficial to travel businesses, albeit smaller amount, 70, 60%. It's still a good support. I know most businesses, you know, very much value their skilled employees and don't want to lose the skill set. So hopefully the furlough scheme will enable people to retain their jobs. And I'm sure in a large proportion of cases that will be the case. But in some, they might just get there and there just is not the resource to support that those levels of start. And everybody is going to be looking at the fact that ultimately I'm going to have to repay these loans. And what am I going to do to repay those loans? I'm going to have to look at my overhead base. And with travel, I've already said, staff is a key overhead base. So, you know, I can see travel businesses wanting to stretch their resource as opposed to perhaps have the relevant amount of bodies that probably the business needs.
Sorry.
Recruit later.
Yeah, apologies. Airlines are across the board looking at job cuts of 15 to 30%. Do you think that's the sort of level we'll see in the trade, or will it not be as high as that? Hopefully?
No, I think it'll be those sorts of levels.
Yeah, okay, that's bad. When do the debts have to be paid? Because businesses will have accrued a lot of debt.
I get a year's holiday on the repayments, but ultimately, you know, I've been saying to all my clients, it's all very well to get this money, but you're going to have to factor in how you repay it. Interest won't start to accrue until 12 months later on these schemes. So you're going to get a good breathing space, but you're going to have to structure your model and your finances with a view to amortizing your debts and paying interest on it.
Okay. And what do you see in the medium term, the prospects for the sector, Chris, and its funding? If we expect 2021 to be a year of recovery, but not return to last year's levels, maybe 2022 or 23, do you expect to see a healthy travel trade by then?
I do expect the travel trade to get back. I mean, it's clear. You've only got to look at the statistics here, and you're much better at those in as far as the travel industry realistically is concerned than I am. But in 1970, how many people were travelling worldwide? 200 million. Now, last year it was 1.5 billion. People want to travel. All of us want experiences. All the benchmarking surveys say we are. initially. Having higher employment isn't going to help. People being careful with their financing isn't. But ultimately, I think the flow will come back. And I think the travel industry, who after all gives us our dreams, that's the one good thing. I spend half my life giving people bad news. What the travel industry does is give people their most enjoyable experiences of the year. We all have dreams. None of us want to travel less. I believe the industry will come back stronger. I think we'll see some good things come out of this. I think the whole situation around protecting consumers is going to be enhanced. We can see airlines and hotels putting in enhanced things here. I think the global situation will improve. You see Prince Charles's comments today about using this as a sounding board. Absolutely get behind him on that. So I think good's going to come out of this. But yes, I think the travel industry will get back.
Good. And are you planning a holiday?
I'm not planning a holiday just yet, but I'm gagging for a holiday, that's for sure. I was supposed to be away last week. And I missed it greatly. So as soon as I think I'm ready, I'll go. Unfortunately, my son's shielded, so maybe restricted on taking a holiday for a bit longer than others. But I certainly am looking forward to a holiday.
Me too. Chris Photi, many thanks.
Thank you, Ian.